Friday, February 28th, last day of February. This is Market Analysis, Stan Ehrlich. And I start out with the stock market indexes, the E-mini, etc., and futures markets. So we have some potential downside breakouts. Could be modestly important for the next several weeks, maybe a month or two or three, or even a little longer. And I'll get to that in a moment. But basically, it's breaking below. And if we can stay below the lows that were made in mid-January, January 13th. Now, here we have the E-mini daily data chart, and we are oversold. Lower on the day at the moment by about a point, near the low of the day, but being oversold and close to a support level, which was the mid-January lows. But it also correlates with other particularly important high and lows over time. So I think we're very close to a bounce. And that bounce may bounce off of 58.47. But if we close below 58.40, 45 area, specifically, I believe 58.43 and a half, but that's give or take a few ticks. Then if we close below that, we have a downside objective because of a double top, double or triple top, same thing, slight variation. Bearish objective is the same anyway, of 54.50 on the downside. Now, that's fairly significant. Remember, we have been going essentially sideways ever since about October, November. So this market hasn't been trending much lately. And now, again, oversold, that's important. Near support area, or in some cases in support, that's important. And usually when you get that combination, the market bounces. It can be a very, very big, important bounce depending upon other circumstances, but at least at a minimum, some sort of bounce. And a bounce, I mean, a big bounce in one day, or a modest bounce over a few days, or generally speaking, over a few days, whatever the size, but not necessarily one. It could be. And a week or two, maybe, but not necessarily huge and long lasting. So a bounce. Let's see if it happens. From slightly lower than we have been today, which would be the low of the day. Now, the 1 minute chart on the E-mini, we've been coming down sharply here for the last several minutes. This is attacking or getting very close to the low of the day. And I do think it's going to make new lows again. You know that I have been talking about this topping out development or formation, excuse me, for weeks, probably over a month. Okay, so now we're going to go to the spider, which is extremely similar, of course. I consider the SPY, the ES, and the MES kind of like daddy, son, and baby boy. E-mini, of course, micro E-mini being the baby, ES being the son, and the daddy being me, the S&P, SPY. So they all go up and down essentially together, but they do have different trading hours, so that affects the way the charts develop and look, highs and lows, closes, etc. Nevertheless, we all have the same situation here, all coming down some. Some lows have been broken, some lows haven't. We're very close to breaking the lows on the SPY, basically the same thing as the E-mini. Now, the SPY 1 minute chart. QQQ did break today the low that was made, and that's significant, on January 13th. Now, at the moment, we are slightly higher on the day, but if we close lower, especially near the low of today, or making new lows for the day, we'll have a downside breakout of a double top formation, and we have a downside objective, if that works out correctly, of a little under 460. Pretty significant. So what does the 1 minute chart say? Starting to slide here after a bit of a sideways, but we don't see it breaking down quite yet like we just saw on the E-mini a moment ago. The NASDAQ broke and closed below its previous low, which was again on January 13th. That could be a bearish breakout of a double top formation. The first high, of course, being December 16th, and the second one, which was an outside down day, bearish engulfing, on February 18th. And look how fast we came down, and look how much we came down. A little bit of a surprise as to the speed and amount, but no surprise whatsoever that it was coming down because of the bearish outside down day, bearish engulfing. Part of my ER sell signals. The only problem with this one was it wasn't quite overbought. It came so close to turning red, like that one, and that one, and that one. Some of them didn't work. They have small losses. That one did great. On the average, they do, and then some of them produce fantastic moves, as you've seen if you've been watching me daily for about 2.5 years now. Next, NASDAQ 1 minute chart coming down pretty good. So we have a minor intraday, minor breakout. I'm going to see if it closes below that previous breakout level. Again, the low on January 13th is very important. Trading below it, it becomes resistance, and that was it for yesterday. We closed below. Today we got back up to it a little bit higher, and now we're sinking again. So Tierra del Fuego, land of the south, land of fire, sorry, or head south, because it's a nickname for the southern tip of South America. So I like what I see as far as being bearish for a little while. Again, maybe a month or two, or even a little bit more than that. But the downside objective here is 19,015. Next. And that's the 1 minute NASDAQ. Okay, now the YM, Dow Jones, does have a double top with a bearish engulfing ER sell signal on the second high day, January 31st. We have another new low today. But again, most of these indexes, if not all of them, are oversold. I think all of them. So I am expecting some sort of stability or small bounce for a short period of time, as I've said, across the board. We're not at any particular support area per se here in the Dow, the YM that I can come up with. So it might just slam dunk real fast down to 42,366, although I kind of doubt that. I'm looking for a minor bounce, but I'm also looking for it to test 41,971, break it, and go all the way down to potentially 38,300. Next, 1 minute chart on the YM shows some significant weakness developing here the last couple of hours. Looking for new lows for the day? Probably. Next, we got the Russell. Made a new low for the move again today. Now coming down to the bottom of this red support area. And at that level and lower, we have a whole mess of variety of support levels. It's not particularly important to draw them in right now. The one that's closest, in my opinion, is 2112-ish. And I do think that's going to be tested, but I don't think it's going to hold. We may bounce off of it for a few days to a week or two and then break below it. What about the Russell 1 minute chart? Making minor new lows again here this morning. Again, looking for new lows across the board. Okay, what about bonds? Well, it made another new high. Yay! So the head and shoulder bottom of the bond market has now worked out fine, including a couple of idiosyncrasies that this particular pattern had. After the breakout, it stalled out for over a week. Usually that doesn't happen. It usually goes right back up, sharply higher real quick, has its correction, which lasted all the way down to the neckline. That's fine. And that was February 12th. And now we've seen it go all the way up to its minimum upside objective And that was just a few days ago, early this week. So this is all gravy at this point, higher levels. But that's not the bigger story. The bigger story is the giant 1.5 year potential double bottom formation with a huge upside objective of about 145. But we do still have to break out above the high of the previous, hang on a second, above the previous highs. And that would be the upside breakout above 127. So I am looking for more strength, but we are overbought for the moment. As a result, I think we're going to have a minor downside correction and then higher levels after that. So I like what I see very much. Now, the July soybeans. I'm sorry. This is out of sequence for some reason. I am sorry. I have goofed on that. Let's move it over to where it should be. Notes. I'm sorry. That's notes. I goofed up. Hey, it's Friday. So the notes also have an even better looking broad double bottom for the last year and a half. And I'm looking for the resistance level to get broken, but we are in that resistance level right now and overbought. So, like bonds, I'm expecting a minor downside retracement, maybe 110. Yeah, maybe even a little bit lower. Not lasting too long, several days, a week, hair more possibly, but new highs after that. Double bottom is very important on a long-term basis. It may take over a year, but my upside objective at a minimum is 124. Could be a lot higher than that. Crude oil. Have a downside retracement that could have been over a couple of days ago. Couldn't really tell. Having a little bit of a hard time coming up with something really intelligent to say about crude for the moment. But generally, it's a gigantic pennant formation that we broke out of, but then it dropped back into it again. So everything's up for grabs momentarily. I could see it dropping off a little bit more, and I could see it holding in this area. That's about the best I can say. Sorry, I'm not coming up with anything much better. And it's pretty much a similar situation at the moment for the heating oil. Support's been tested. We came very close to being oversold. And also, I should say, in the crude oil as well. So I really kind of favor sideways to a little higher because of the almost oversold condition and some support. What about natural gas? Resistance area, rally high, stop classically at the resistance level. Now, this is my interpretation of support and resistance, obviously. So that worked out really well. I'm now looking for a little bit of a dip down to 3.56 and then higher after that. Maybe quite a bit higher after that, because if we start closing above 4.4, it's a new high for a long period of time. Looks like 2 years. Next, gold. Now it's come down today to the previous high, which is support, and that was back in October 30th. And we're getting very, very close to oversold. I think we're about to bottom out on this particular break and turn around and go back up. I hope we get oversold today or maybe early next week. And I hope we get a green bullish engulfing buy signal. Let's find out. Silver, also almost oversold, generally in a broad support area, looking for a major turn back up again. But not yet. I think we've got a little downside to go. Now, there's also a possibility of a bigger situation developing. I have drawn in today for the first time the possibility of the high that we had on May 20th. It's a shoulder high. The high that we made on October 23 is the head of the formation. Both were overbought. Classic. And the last shoulder high was overbought. about the right price levels, a little bit sooner than I would have expected timing wise, but basically all the body parts are there. So if we start breaking below the neckline, which I've already drawn in for you here, that could be very bearish. And the minimum downside objective would be just eyeballing it for the moment, around 23, 24, 25. Next, platinum. Only silver has that head and shoulder, not gold and not platinum. Platinum is now oversold officially just today, first time for a while. Last November, we were oversold and did bounce nicely. Now, I'm expecting the same thing, oversold, in support. It looks like we're about to turn around, but you can't tell that just by looking at the way it's acting because we're low and last and down a chunk. And most people would say, wow, that looks pretty bearish. Nope. I think it looks like the bearish is almost over and we're about to turn back up. We'll see. High grade copper trying to hold, which it did, just a hair under the low earlier this week on Tuesday, at support very nicely, not oversold though. So we just might see it slip some more. Can't tell yet. This is not any kind of a reversal. It's only a minor bounce off support. Next chart. We got soybeans, soybean oil, meal, corn, wheat, cattle, hogs, and a stock. So, soybeans, new lows. I said it might come down here, and here it is. And we're also on the fringe of being oversold at 26. All I got to do is hit 25 exactly or lower. And then the price bars will turn yellow as well as my RSI bars. Now, this is my custom RSI. It's customized in minimum 3 different ways. I learned RSI from Wells Wilder himself in the late 70s, 80s, and 90s. It was on the International Lecture Circuit. And all the other guys, George Lane, Stochastics, John Bollinger, Larry Williams, Linda Bradford Rashke, great gal when shopping with her in Singapore, and a whole bunch of other people too. Great experience, to say the least. So I'm looking for a low here coming soon, but not quite yet. Soybean oil, I have to give you the same exact statement, except this time I'm going to add, we're now in a support area, very close to oversold. We have a potential head and shoulder bottom. We are trying to have simply what I would call a downside correction in the process of going up to the neckline, which is all the way up to about 51. That's a big move to begin with. But if it does break above 51, then the minimum upside objective is all the way to 62. That's going to take a few days, obviously months. We'll see if this thing turns around and starts to head into new high ground for a few months. Then we're going to go for the neckline, and then we're going to go trending a lot higher, a lot longer if everything works out correctly. Soybean meal. Well, another minor new low. This is a different story. I don't want soybean meal to be a new low ground for a year and a half, and that's about right. Maybe a little longer than that, but we're very close to that. We're close to being oversold. We might have a little double bottom here from the lows in December 19th to the current. That would be okay, but got to watch carefully here. Soybean meal is not behaving bullishly at this particular moment, although I think it's close, but not turning up yet. What about corn? Now oversold. We hit support, but dropped below it. Now I'm expecting it to turn back up any old time. The long-term picture still looks bullish to me. There was a head and shoulder bottom. It did work just fine. It reached its upside objective. It went up some more, not too much. But now there's a bigger pattern that could be building. I have to think that there's a possibility of the low that was made February 26 of 24, a year ago, is a shoulder low with a bullish engulfing ER buy signal. The head of a smaller July through October, head and shoulder bottom, which did work, I just said that, is in itself the head of the 1 year formation, and we are now coming down to make the last shoulder. So that's the head and shoulder bottom, past tense, maybe inside of a 1 year head and shoulder. Not a super common combination, but I've seen plenty of them. But then I've been watching charts for over half a century. So I drew my own charts by hand for over a decade. Next, wheat. Oversold yesterday and today again. Could be bottoming out at support. I'm looking for a turn back up again. I don't want to go short when markets are oversold. I won't. I'm looking for buy signals. I'm expecting it. I get them sometimes, meaning turning green with a bullish engulfing and oversold conditions, or just simply turning up. So I'm watching for a turn up. Cattle. Looks like we're about to make new lows again. We're not quite oversold, and we're not quite at a support area, so a little bit lower in the next few days, and it might not necessarily stop there. So lower. Hogs, new low again, major support area, looking for lower levels, probably down to about 81 level. Okay, let's go to that one stock, XYZ, that I've been monitoring for now a few months. Because it's got a gigantic, long-term, huge support area that it's dropped down close to the major support levels. So I think there's a little bit more downside potential, but I hate going short. I won't go short when markets are oversold, which this has been since the big downside gap. And that's another factor. We've got a gap to go up and close. It won't be closed until you rally back up to about 81.70-ish. Oversold conditions tell me you're about to start to rally. Today, we came super close to the low made earlier this week. Are we going to get a little tiny 1 week double bottom? Maybe. I got to watch very closely here because this could be a very good short-term trade for about 10, 15 bucks. Next, back to the mini. Looks like we're approaching the lows. Oh yeah, we're about to make a new low for the day, in my opinion. You guys have a great day and profitable trading to you.